Hello, all, and welcome back. Now, I know I say this every single week, but wow, what a week in the market. Personally, I had a massive week. So, anyone who follows this channel knows that I hold a very large Nvidia position, and I also hold a lot of Amazon shares. So, I likely got about 6 months worth of market gains in about 3 days. And if you thought that, you'd be correct. It was a huge week for me. Apparently, there was this investors only consumer electronics show out in Las Vegas this past week. And at this show, a lot of these tech companies kind of reveal what they have coming down the pipeline, as well as kind of review some of the products that they have out currently. And this caused a lot of excitement in the investing world and caused certain stocks to surge, one of them being Nvidia. As a matter of fact, Nvidia surged so much that I actually made Jensen Huang the wallpaper here on my phone. It's sort of like, this is an honor, right? I have no control over what goes on Mount Rushmore, but I do have control over this. And so Lord Jensen is now my wallpaper. And every day I wake up, I'll actually do cheers to my phone now. Cheers, Jensen. Um, so I am very grateful to Lord Jensen. All right, so if you do watch this channel, you would know that I probably held covered calls against the underlying position that would maybe cut my gain short in Nvidia, and I might not be able to realize a lot of the profits that I got out of this sudden surge. And I'll admit, I've never had a stock surge like this one did those 3 days. It went up like something like 60 something dollars in like 3 days. And so in this show, if you're interested, way later on, I'll talk about how I was able to maintain those gains, even though I had covered call options in place against the underlying. Now, before we get started, I want to thank everybody for checking out the channel. It's definitely much appreciated. Thanks to new subscriber Chip. I notice every one. It's a small channel, so I definitely notice every single one. And I'll tell you why I'm appreciative of people checking out this channel. It basically goes back to why I started the channel in the first place. You know, I started this channel because basically my friends don't want to talk about finance, and my wife definitely doesn't want to talk about finance. As a matter of fact, this past week, when I was trying to share good news with her about the stock market, I was like, Heidi, Nvidia is up $32 a share today. And she's like, uh, okay. And I'm like, whoa, we have hundreds of shares of this stuff. And she's like, says to me, yeah, can we talk about this later? You know, I need to go wash the cat. And and so I was like, wash the cat. And it's things like this. It's why I have this channel. Now, to be fair, I went home and I smelled the cat, and it did smell nice and clean. So she was telling the truth, but I just had to make sure. And also on the way home from work on that day, I did something stupid. You know, I was so happy that I made a purchase that is probably going to make her mad. Now, it might not make her mad because she might not know how much I spent. Um, Personally, I had no idea how much this sort of thing would cost because it's not the sort of thing that I go off and buy. But maybe she will know how much I spent, and it might make her mad. Who knows? I guess we'll find out together at the end of this video when I get to do, like, at the end of my videos, I do like fun time. And so we'll see if it makes her mad. I'll just record it and we'll see what her reaction's like. All right, so in this video, we'll quickly discuss what NVIDIA announced at the Consumer Electronics Show in Vegas that made the stock surge, among a couple of other things that other tech companies might have announced that excited investors. Also, in this show, we'll talk about CPI, PPI, interest rates, the odds of a March rate cut, and how that might impact equity markets. Okay, and I'll also provide some thoughts for this earnings season that we have coming up. And for anyone interested, like I said, I'll go ahead and show you how I manage my options portfolio and maintain my Nvidia gains, even with a couple covered calls in place. And then, like I said, finally, at the very end, where I like to put in my fun stuff, I'll reveal what I bought that may or may not irritate the wife. All right, so we have a lot to get into, so let's just go ahead and get this going. So this here article details what NVIDIA announced at this Consumer Electronics Show that just ended last Friday. And all of it seems to revolve around generative AI. And basically, all things AI seem to be going straight through Nvidia. And that's what caused this stock to surge. Now, things that they made announcements that span consumer computing and gaming, the automotive industry, and robotics. And what they're saying is, though a lot of these things are consumer focused, IT pros must be aware of them as the consumer markets typically foreshadow what's coming in business technology. So even though this is starting with, say, people playing video games at their home, it's eventually going to expand out into something much larger that big companies are going to pay big money for. Now, one of the things that was announced was this new GeForce RTX 40 Super Series of GPUs. And that's going to allow for these AI ready laptops and generative AI tools to be brought into our own homes. And they were basically focused on gamers and creators. And they also announced at CES that there's going to be a new wave of RTX laptops that are going to be launching, and that's going to be launching from every major OEM. So we can expect that a lot of these, like I said, all things AI go through NVIDIA, it seems right now. And these OEMs include Acer, ASU STEC, Dell, HP, Lenovo, and Samsung. So they're all going to be incorporating, if they want to stay on the cutting edge, they're going to need to grab some of these NVIDIA products in order to remain relevant. Now let's see what else was announced on this here. Now, some of the things that were announced, like I said, people already knew. Like more than 500 Activision Blizzard games and apps use this RTX technology, but we already know this. You know, a lot of the bigger games are already using GeForce, NVIDIA technology. It comes up when you turn the game on. Twitch, new Nintendo Twitch system is using this GPU platform, and this is all well known. But what wasn't really well known until they put it out at this computer show is the company's robotics simulation app is speeding up bringing robots into the real world. At least this is what they're claiming, and no reason not to believe them. The use of cooperative robots in the workplace is growing in verticals such as manufacturing and warehousing, and will be coming to healthcare and other industries. So this would be an example of how some of this, consumer type of stuff, it transitions into the workplace and allows them to make even more money in industrial manufacturing settings and that sort of thing. The also in data centers too, we know that they're expanding into data centers and that sort of thing. So they're really taking the bull by the horns, and they're by far the industry leader. Jensen Huang is basically Mr. AI. Like he is AI, and all things AI go through Jensen Huang. Now, as you would expect, NVIDIA, this set of announcements was comprehensive. While other silicon companies are pecking away at NVIDIA's AI dominance, any company looking to compete with NVIDIA will have to think beyond just the GPU. And that's one of the things that makes NVIDIA so interesting and why it's a long-term hold for me. And you're going to have to pry those shares away from my dead fingers. It's because until something changes, like Nvidia, thinks 10 years out in the future. They're not just thinking about this year or next year, what's their 5-year plan. They're thinking like 10 years out, and everyone's got to try and keep up with them. And to this point, at least for the last 15 years, no one's been able to do it. And so NVIDIA's strength is in building systems that include the GPU, software, and other hardware from a broad ecosystem. For me, the highlight of NVIDIA's announcements was the AI laptops, as they bring generative AI capabilities to the desktop to complement what's already happened in the cloud. Now, another thing that they mentioned at this show is they announced a partnership with Mercedes-Benz to home self-driving capabilities. So this is how they're getting into the automotive industry. We've known that they've been behind self-driving, and they've been heavy in the automotive industry. All you have to do is look at their annual 10Ks, and you can see that they put their automotive business partnerships and profits in their annual 10K, and they do make a significant amount of money from automotive. But it's a place where NVIDIA can expand and actually create just even more revenue and profit. It's just another place where they can just grow. And so this excited people. Now, not to be outdone, A&D also revealed their GPU that they have coming out. And what they said is one of the things that differentiates their technology from NVIDIA is it's like NVIDIA stores a lot of their generative AI on the cloud. And what they're saying is that their AI capability that you typically see in the cloud will be brought locally into your PC. And so this was something that they were bringing to this computer show, and this did cause their stock to surge as well. But like we said before, NVIDIA is bringing this AI capability to computer laptops at home, and it's being going to be put out there by a lot of the OEMs, including Dell, Lenovo, Samsung, and the like. Now, there were a lot of other announcements at this computer show. Let's go ahead and go over some of them that were not NVIDIA or AMD. So we had Walmart announced that it's digging deeper into generative AI. We had the Screen Actors Guild, can't invest in them, who cares? Samsung, I guess you can, I suppose, if you Paramount Studios or Netflix, maybe. Samsung's display unit showed off some foldable phone prototypes. LG showed off a transparent TV. Volkswagen is partnering with OpenAI to bring chatbots into the car. Guess who's going to get the power of that? And I guess Apple wasn't at this show, but they did announce that there's going to be some sort of iPhone tripod that can tilt and pan automatically. Acer unveiled new laptops that feature Intel's latest core processors that might have made Intel go up a little bit. And Intel does seem that they are trying to get into the AI business as well. Everybody's going to have to, or otherwise they're going to be left behind. And last but not least here, it looks like Microsoft added a dedicated Copilot key to their keyboard. So I guess they still have keyboards, which sounds like old tech, but there's going to be like a Copilot key on there, and that will allow you to access AI generative AI like applications or what have you, just straight from the keyboard by hitting that key. Dell announced that it's actually going to partner with this new Copilot key. So Dell might actually benefit from this partnership with Microsoft, as well as they seem to have something of a partnership with Nvidia and their GPUs. So for this, I looked to see if Dell actually surged last week, based on the partnership that they had with Microsoft, and it doesn't seem like that news did a whole lot to Dell above and beyond what the rest of the S&P 500 was going up. It went up about 1% last week, as did the S&P. It has a price to earnings ratio of 21.96. Now, a lot of these pure hardware plays tend to trade about, anywhere between, say, 12 and 16. This one seems a little on the expensive side, maybe because of these partnerships and with these big AI ambitions or what have you. It's got a little bit elevated. Like for instance, like Apple always traded between 12 and 16 times until Tim Cook got there, got them more into services and subscriptions and things of that nature. And that's what allowed Apple's PE to go up over 30. And not to say that PE is really important, but I don't know, there's just, in the tech industry in particular, the price to earnings ratio just seems to be kind of important, where it really isn't in other places that much. But for certain companies, it seems to be, and computer hardware seems to be one of those places where I guess it does matter to some degree. Now, another thing that caught my attention from this computer electronics show was this adaptive eyewear. And while we all know that, glasses help you see a little bit better, what they don't generally do is help you hear better. And so these things would have some of these glasses were fitted to actually help out with hearing loss. That would be the case with these Xander glasses. Some of them help you out if you have like central vision loss. But one of the things I think is really interesting about these glasses is to me, it's like a real world use case potentially for, metaverse technology. A lot of us look at metaverse as being dumb, but sometimes like a technology in and of itself, even though you can't come up with a use case, if you put it with other things, other exciting technologies can come together and create something new. It's sort of like, this phone here, this is you got to have phone technology, you got to have Wi-Fi, you've got to have internet, you've got to have touchscreen, and each one of these technologies are good, but put together, then you get yourself an iPhone. And that might be the case with the metaverse and these glasses. You might be able to use metaverse and some sort of like phone application like this here. Maybe this would have like a translate on it, and these glasses will help you interpret other languages in real time. And this might be an interesting use case for the metaverse. Another thing that this would do, these glasses do, is when one of these sets of glasses, I think it's the second one down here, Lighthouse Tech, it will actually like print on your glasses what is being said. So if you're like, let's say, in a noisy restaurant or something like that, it will print in real time what's being said on your glasses, so that you can hear somebody else like a crowded restaurant or something like that. But that might be a way that you would get other languages interpreted straight to you. What if they put it in another language right onto your glasses? Like you're hearing something in French, and then it pops up in your glasses in English. So these might be ways to actually use the metaverse. And I thought that this glasses stuff was a pretty interesting thing that happened at the Computer Electronics Show. So let's see what happened to Nvidia here in the past week. We can see that in the past 5 days, it was up $51.83. That's 10.46%. From the low, it looks like from the low here, a recent low on the 3rd of January, all the way up until 2 weeks later, it's well, actually 10 days later, it's up $71 a share, or 15%. But what has that done for the valuation of Nvidia? Is it still a buy? Is it the sort of thing that I'm looking to get more of? Well, like I said, I've got plenty of it now, but what I want to accumulate more shares, being that this does seem like it's going to be a pretty good portfolio driver for the foreseeable future. So when you look down here at the valuation of Nvidia, and like I said, a lot of the companies, they don't really have their feet held to the fire the same way Nvidia does when it comes to valuation, or any of these large tech companies. You turn on like CNBC, if you talk about Microsoft, they'll talk about the valuation. Talk about Apple, they'll talk about the valuation. They don't necessarily do that for every stock. They certainly don't do it for the cybersecurity stocks and for Eli Lilly and Costco, but they definitely do it for these. So this is important to see whether or not it's actually a buy. Now we're seeing that it's trading at a forward PE of 44, which is elevated. However, its growth forecast over the 3-5 years, about 100%, and its profit margin is massive at 42%. For me, I'm not afraid to buy this at this price, and I think that if you hang on to this for about 10 years or even 5 years, you're going to be very happy that you did. You compare that to something like an AMD. Let's see where AMD is, what their price to earnings ratio is trading at. We will see that this one is considerably more expensive than Nvidia. It's trading at 1,100 times. Its forward PE is 55. This one is not looked at as closely, we'll say, as Nvidia, because Nvidia is in the Mag 7, and people are really interested in the exact price to earnings ratio of these Mag 7 stocks. Same could be said for Microsoft here. They, like I said, they've introduced that Copilot technology. It's trading here at $388. It's got a price to earnings ratio of 37. Forward PE is 34. That would be considered rich. Maybe it's allowed to trade a little bit richer right now because of the way that it's progressing through this AI universe. It's got, same as it always had, 16%, well, in this case 15% EPS growth for the next 3 to 5 years. It's got a nice profit margin of 35%. You compare this to like companies that, like I said, that aren't scrutinized so closely, companies like Eli Lilly, and you'd see that this is a company that people will say it's a screaming buy. You need to go out and get it right now. Don't wait. But it's not one that's looked at that closely. It's not one that people care. This one trades on technicals. Hey, it's going up. Why don't you buy it? It's got a price to earnings ratio of 116, forward PE of 97. They'll never mention that on television. It's got a really nice growth forecast, so 28%, with a profit margin not nearly as good as the tech companies, but decent at 15%. And then you look at something like a Costco, which they'll tell you, you got to make sure you go out and buy Costco. But again, Costco is one of these that they just don't care what the price to earnings ratio and what the margins are of this company. It trades at price to earnings of 46, a forward PE of 43. So the forward PE on Costco is about the same as Nvidia. But with Nvidia, you get 100% growth. With Costco, you get 8. You get a 43% profit margin with Nvidia, which is very impressive, by the way, for a hardware company. And this one you get a profit margin of 2. But again, go out and buy Costco. It just trades on technicals. No one cares what the valuation of this one is. They only care about the Mag 7 and certain tech stocks. All right, my senses tell me this video is running a little bit long. I'm going to quickly get through all the CPI data, PPI data, and my view on what I think that holds in store for the market for the next few months based on interest rates and that sort of thing. All right, so let's look at, as we know, the CPI came out this past week, and it showed that it was up 0.3% month over month, 3.4% year over year. That was an increase of 0.2% year over year, went from 3.2 to 3.4. That caused the market to go down because they're like, all right, well, we're not going to cut interest rates the way that in March, the way that we thought. And so the interest rate probability went from before the CPI print of 71%, then all of a sudden it went down to 67% after the CPI release. So what was the main driver of this higher inflation? Well, food at home stayed even. Energy went up a little bit, so we'd say this would be a driver of that higher than expected inflation. But the big one was going to be this shelter. No one expecting this to go up. Now, this is 40% of inflation, and this went up. I would expect in the months to come, this was going to actually come down, you would think, because that is what is happening right now in the real estate market, especially with rents. You'd expect that to come down. And so our future CPI prints are going to be a bit lower. But then the day after that, what happened was the producer price index came out. And this came out softer than what was expected. What actually came out was 1% when everybody was expecting 1.3%. And the importance of this is it tends to signal to the market what the next CPI print is going to be. And so it came in lighter than what we expected. So the expectation is that the next CPI print is going to come in softer than expected. And what that did is it took this probability here of 67% of a rate cut in March and moved it up to 78%. So it put the rate cuts in March firmly back on the table, and that's what caused the market to go up after this PPI print. And the other thing that it did was it caused the 10-year yield to go down. Now you may hear them say things like, oh, the market is priced in, say, 5 rate cuts this year where the Fed's only talking 3, or then maybe you'll hear them say it's 6 or what have you. All they're doing is each rate cut would be 0.25, and all they're doing is taking the federal funds rate, which is about 5.25, and they subtract the 10-year note from that. It leaves you a number. That number in this case is about 1.25. So they would say that would be 5 interest rate cuts is what the market is pricing in. So after the PPI release came out and the March cuts became more back on the table here, the rate went from 4.02 and it ended the week at 3.94. And that would be the market pricing in a rate cut in March. And that's how they'll talk about that number and how they say that the market is priced in, say, 5 rate cuts rather than 3. So what's my take on this market here, and what do I expect to happen through this earnings season? Well, I think that the market has gone up a lot over the last couple of months, and it might be that the slow start we've had to the beginning of the year for a lot of equities might not be the worst thing for earnings season. So a pullback in earnings might indicate that if a company gets good earnings, that the market might go up a bit. And so I just feel like this market has to digest an awful lot of positive sentiment. So I wouldn't be at all surprised to see if things don't come down a little bit, to see companies knocking earnings out of the park. And yet the response to this might be just a little bit muted because, a lot of good news has already been pulled forward into these earnings. And myself, I put a lot of money into fixed income this past week or so. And that's because what I'm bracing for is March. I'm just not sure how the market's going to react. I don't know that earnings is necessarily going to pull the market up, but I do believe that the market's going to be really nervous going into March, and maybe that will actually cause a little bit of a correction or a pullback. And when that happens, I kind of want some money available so that I might be able to jump into Microsoft. Microsoft is the one that I really want to get into. Now, something that I've noticed is there does seem to be a shift back into the mega caps. I think going into this year, everybody's like, "Oh, you got to own utilities, you got to own consumer staples, you got to own small caps. Small caps are going to lead the way. Get out of mega caps." And we saw the Mag 7 go down like in a straight line. But it just hasn't, it's not working out that way, at least not this far. I'm not saying that it won't with interest rate cuts, eventually shift to small caps, but it's kind of rare for small caps to actually lead the way. And there's a good reason for that, because roughly 85% of all the money made in the stock market is made from like the top 100 companies. So why, if the top 100 companies are making 85% of all the money, why would they not continue to go up? And I'm not saying that small caps won't have their blowout times or even their blowout years. I just think that in the end of the day, when you look at all this, that the large caps are just going to outproduce these small caps, and that has to do with earnings. They're the ones making all the money. So that's why I favor mega caps myself. Now, I know I also said I wanted to go over my covered call position with Nvidia, and how was I able to maintain so much of my market gains with these covered calls in place. Let me go and show you real quickly how I did that. It's going to be like our lightning round on that. Now, here's my NVIDIA options position since the 5th of January, and here's how I'm trying to recuperate a lot of the gains in the underlying here, given that I had sold covered calls on it. Now, understand this is a pretty extreme case. I've never had one take off so far, and as long as I get most of it, if I don't get all of it, that's first world problems. I still did quite well. So as you can see right here that I had a covered call sold on this. It's 497.50. If it goes above 497.50, that I mean I would have to sell, in this case, 200 shares of Nvidia for $497.50 by the expiration date, which was 2 days ago on Friday. Now you can see that right now the price of Nvidia is $547.10. So you can appreciate that I wouldn't actually want to sell 200 shares for $497.50. I'd be losing an awful lot of money. So what I did was I closed out this covered call by buying it back, and it cost me a lot to buy it back. It cost me $4,447. And what I did was I rolled the price up to 512.50 and rolled it out in time to this Friday, and someone paid me $2,934 for that. Now, at 547 right now, it would have to come down an awful lot, especially as Monday's a non-trading day, to get it down to this price. So I expect I'm going to lose these shares, but I'll get to keep this money, and I'll get to keep all of the profit up to 512.50. But I do want Nvidia, so I ended up selling a put with a strike price of $535. And so someone paid me for two puts, $14.78 for the two contracts. What this says is if Nvidia is below 535 by next Friday, I will buy 200 shares of Nvidia for $535. Let's say it's 531, I'll pay 535 a piece. However, it's above 535, then I don't buy any Nvidia, and I get to keep their $1,478. All of these contracts total end up a positive 794. Let's just, for the sake of easy math, call it 800, which means that I'd actually be selling everything, provided this stays above 535, I'd be selling everything for 516.50. All right. It's not everything back, but it's a lot back. And if you'd asked me a few weeks ago, would I sell Nvidia for 516.50, I would have said yes. But what I'm going to end up doing, so I don't like to sell covered calls going into earnings. Now, Nvidia, I normally wouldn't be selling any covered calls on this stock a month ahead of time. It reports earnings on February 24th, so I would cut it off at January 24th because these things tend to run up into earnings. So, but what I will do is if I don't own this stock, and I still don't own the stock after this Friday. Let's say it doesn't come below 535 and I keep this money, but I don't own any shares. I'll then sell more puts against the underlying here until I get these shares. And so maybe at the end of the day, instead of 547.50 or $547, maybe I'm going to have it at like $540. I'll get that much return. But I just think that if I stick with this and I keep doing it, I'll not only get that money back, I'll get a whole lot more. Because remember, I bought my cost basis on this, and I would show you detail, but this thing's running way long. My cost basis on this stock is like $449, and I originally bought it for like $485. So I've made a lot of money on the way down. So I really haven't even lost this, if I'm honest. But I'm just saying, since this day. My cost basis is $449. I sell it at $516. I've done pretty well, but I'm going to continue selling puts against this until I end up with this stock, because my intention is never to not own Nvidia, at least not while it's a good deal like it is right now anyway. All right, so that's my take on the market. That's how I'm rolling this Nvidia position. That's my take on the computer electronics show and the sort of things I think we have in store. I'd like to thank everyone for checking out the channel. If you got anything out of this video, yeah, please like, subscribe, hit that little notification bell. Until then, we'll see you next time, and have a great weekend, everyone. Bye. Heidi, you know how I had a good week in the stock market last week? Well,
You were telling me about that.
yeah. Well, I got something. I got a bottle of this Dom Perignon.
Oh, there you go.
You know how much this costs?
I don't care.
Um, you will if you find out it's $240 for a bottle.
Jesus. Okay.
But I also went to the store this morning with Waitrose, and I got this right here. This is called champagne. That's what it says on there.
Okay.
Waitrose champagne. So I expected you'd be madder about the Dom Perignon, but what we'll do is we'll pour
I'm
each
not
and
thrilled.
well, it ain't good news for you, is it? Well, we'll pour two into glasses and we'll just see which one you like better. What do you think? Okay, well, why don't you smell that one and tell me what you think smells better.
Which one's which?
It's a surprise. You gotta tell me
Surprise.
if one tastes better.
It's either this one or it's this one.
That's right, yeah. Smell them both
Okay,
and
so
see
I
which one you
smell
think.
it. Huh.
What does that smell like?
I don't really like the smell of that one. Let me smell those again. Hang on. Okay, I like that one better. The smell of that one better.
You like the smell of this one better?
Yeah.
Okay, she liked the smell of this one better. And now taste them?
So which one should I taste first?
Whichever one you want.
Okay, I'm gonna taste this one. Boy, I don't know. Let me try this one. Definitely this one.
That was better?
This was much better. Yeah, it's
Really?
better taste, smoother tasting. Yeah.
For the record, she chose Dom Perignon. What a
Yay!
shocker. All right, I'm gonna go ahead and pour it in two glasses and see which one I like better. It just surprised me.
Okay, so should I just switch them?
Yeah, no. Go back there and get two different glasses. Okay, so you give me two glasses. One of them is Dom Perignon and the other one is champagne, right?
Okay, yeah. So
Which one do you want to give me
is
first? Yeah,
Example
smell
number
them.
one. Smell them first.
Know what it smells like? It just smells like maybe like furniture polish, I guess. This one smells like pee. Okay. I'll start with
Okay,
I'll
so-
start with the furniture polish. Tastes like raw sewage. All right. I'll finish. I'll chase the sewage with the pee here. Okay, now that one's way better. Which one is this one?
This one right here.
Is it? Yeah.
This one is the Dom Perignon.
Is it really?
Congratulations, yes.
Yes. Smells like pee, tastes like honey.
Yeah.
I can't believe we both chose the Dom Perignon. All right. Well, it's settled then. Well,
Dom
Dom Perignon
Perignon
is the winner. It's only $240 a bottle, everybody.
I hope it would taste
All
better.
right,
Goodness.
great. Guys, have you ever tried to irritate your trophy wife only to find out that she has really expensive taste and to no one's surprise really doesn't care all that much about money? Man, I have, and I did it with my sponsor this week, which is Dom Perignon. I really should have just bought some Grey Poupon. All right, all that said, of the two champagnes I got today, one was Waitrose brand for about 8 pounds, and this one here is Dom Perignon for about $240. Of the two, this is the only one that I can choke down. So I have to give this champagne 5 Jumana Bersecchis out of 5. Have a great week, everybody.